Today, we're diving into one of the most misunderstood cryptocurrencies, XRP. It's been around since 2012, survived multiple legal battles with the SEC, and yet most beginners still don't understand what it actually does. By the end of this video, you'll know the real story behind XRP, why banks are interested in it, and whether it deserves a place in your portfolio. The story of XRP is unlike any other crypto. It wasn't created by anonymous developers. It's backed by an actual company called Ripple. It has real-world use cases. And it's been fighting for legitimacy for over a decade. But here's the confusing part. XRP the token and Ripple, the company, are not the same thing. And that distinction is critical to understanding what's actually happening in this space. Let's break it down. XRP wasn't born in a garage. It wasn't created by a mysterious founder hiding behind a pseudonym. Instead, it emerged from a specific problem that banks wanted to solve. The problem before 2012. International money transfers were slow and expensive. If you wanted to send $10,000 from the United States to Japan, the process took days. Why? Because banks had to use intermediaries. Money would bounce through multiple correspondent banks, each taking a cut. The sender paid fees. The receiver paid fees. And the money sat in limbo for 3 to 5 business days. Imagine you're a bank manager in 2010. Your customers are complaining. International transfer fees are too high. The process is too slow. And there's no real-time settlement system. You're losing business to competitors. Enter Ryan Fugger in 2004. A Canadian software engineer named Ryan Fugger actually started building solutions to this problem way back in 2004. He created something called Ripple Pay, a peer-to-peer payment network. The idea was simple: cut out the middlemen. Let people send money directly to each other without banks controlling every step. But Ripple Pay had problems. It was slow, it wasn't designed for institutions, and it needed capital to scale. The real story in 2012. This is where the real Ripple comes in. A venture capital firm called OpenCoin, later renamed Ripple, was founded by Jed McCaleb and Chris Larsen. They took Fugger's original concept and completely reimagined it. Instead of peer-to-peer, person-to-person, they focused on enterprise solutions. Instead of replacing banks, they wanted to work with banks. Their vision: create a system where banks could settle international payments in real time, without intermediaries, and with dramatically lower fees. To power this system, they created XRP, a digital token designed specifically for fast, cheap settlement between institutions. Ripple's original promise was revolutionary. What if every financial institution could send money anywhere in the world, instantly, cheaply, and securely? This was 2012. Bitcoin was 4 years old. Ethereum didn't exist yet, and Ripple was already focused on solving a real-world problem for an industry worth trillions. Here's where history gets complicated. When XRP launched, 100 billion tokens were created. Ripple kept about 80 billion in a company vault. This meant Ripple, the company, controlled the vast majority of XRP. For many crypto purists, this was heresy. Bitcoin was supposed to be decentralized, no single entity in control. XRP, by contrast, was centralized by a company. This created a fundamental divide in the crypto community. Some saw XRP as essential infrastructure. Others saw it as a corporate token that violated crypto's founding principles. That debate continues to this day. How XRP works. To understand XRP, You need to understand the problem it solves. And the most important difference between XRP and Bitcoin. Bitcoin is designed for decentralization and security. A Bitcoin transaction takes about 10 minutes to confirm. It's nearly impossible to reverse, but it's slow and energy intensive. For international settlement, you need something different. XRP uses a different consensus mechanism called the Ripple Protocol Consensus Algorithm, RPCA. Instead of relying on miners competing to solve math problems like Bitcoin, XRP uses validators, trusted nodes that agree on transaction validity. This is faster. A transaction on the XRP Ledger settles in about 3 to 5 seconds. Compare that to Bitcoin's 10 minutes or Ethereum's 12 seconds. Think of it this way. Imagine a shared ledger that every bank can see. When Bank A wants to send money to Bank B, they don't need to trust each other. They trust the ledger. The ledger records the transaction. The transaction is settled. Done. This is decentralized. There's no single authority, but it's not permissionless. You can't just join as a random person. You need to be a qualified validator. Let's say HSBC in London wants to send $1 million to Mitsubishi UFJ in Tokyo. Old way, HSBC sends wire, goes through multiple correspondent banks, takes 3 days, costs $50 to $100 in fees. XRP way, HSBC sends XRP equivalent, settles on XRP Ledger in 3 to 5 seconds, costs cents in fees. This isn't hypothetical. HSBC, Mitsubishi UFJ, and other banks have actually tested this. Here's where XRP becomes powerful. Imagine you have pesos in Mexico and want euros in Spain. There might not be a direct peso to euro market with good prices, but there is a peso to XRP market and an XRP to euro market. So the transaction happens like this. Your pesos go to XRP in milliseconds. XRP goes to euros in milliseconds. You receive euros. XRP acts as a bridge currency. It doesn't matter what fiat currencies are on either end. XRP is the connector. This is called RippleNet, and it's the enterprise product Ripple has been building for over a decade. Bitcoin requires massive amounts of energy because miners compete using proof of work. XRP uses validators, about 150 trusted nodes worldwide, who reach consensus through the RPCA. Result? XRP transactions use a fraction of Bitcoin's energy footprint. This is where most confusion happens. Many people think Ripple and XRP are the same thing. They're not. Ripple is a San Francisco-based fintech company founded in 2012. It's a traditional corporation with investors, employees, and a board of directors. Ripple builds software for banks. Their main products are RippleNet, a network for international payments, on-demand liquidity, ODL, a service that uses XRP to bridge currencies, Ripple-branded payment solutions for specific financial institutions. Ripple is not the XRP ledger. Ripple doesn't control the ledger. Ripple is just one company building products that use the ledger. XRP is a digital asset on a decentralized ledger. It was created as a utility token to enable fast settlement. It's not a stock. You can't own a piece of Ripple by buying XRP. XRP exists independently. Even if Ripple shut down tomorrow, XRP would continue to exist and function. Think of it like this. Bitcoin equals currency plus network, same thing. Ethereum is network plus multiple tokens plus apps. Ripple is a company building on the XRP ledger. XRP is a token on the XRP ledger. Ripple benefits if XRP becomes widely used because they hold billions of XRP, But XRP's success is not dependent on Ripple's success. Why this matters. Many people are invested in XRP hoping Ripple gets adopted by major banks. That's one thesis. But even if no bank ever uses Ripple's products, XRP could still be valuable as a settlement layer. This distinction is crucial for understanding whether you're investing in Ripple's business or the XRP token's utility. In December 2020, the U.S. Securities and Exchange Commission (SEC) filed a lawsuit against Ripple. This lawsuit nearly destroyed the project. Here's what happened. The SEC argued that XRP was a security, not a commodity. The difference matters. Securities, like stocks, require SEC registration, specific disclosures, regulatory compliance, and have limited where they can be traded. Commodities, like gold or oil, don't require this. The SEC's argument: when Ripple sold XRP to investors and institutions, Ripple was selling a security. Specifically, it was a security backed by Ripple's expected profits. Therefore, XRP should have been registered as a security. Ripple's counterargument: XRP is a commodity. It has independent utility as a settlement token. It's not dependent on Ripple's business for its value. Suddenly, exchanges delisted XRP. Why? Because if the SEC won, holding unregistered securities was illegal. Exchanges got scared. XRP's price crashed. Investors panicked. For 3 years, it seemed like Ripple was finished. The case went to trial. The judge made a nuanced ruling. XRP, when sold programmatically on exchanges as a digital asset, is a commodity. However, when Ripple directly sold XRP to institutions as a fundraising mechanism, those sales were securities transactions. Translation: XRP itself is a commodity. But Ripple's past sales of XRP were unregistered securities offerings. The ruling was partially a victory for both sides, but mostly a win for Ripple and XRP holders. XRP trades freely on exchanges as a commodity. Ripple pays a $125 million settlement fine. The case is technically ongoing with an appeal filed, but XRP has regulatory clarity. This case set precedent for how cryptocurrencies will be regulated. This is the critical question. XRP's value depends on actual use, not hype, not speculation, real adoption. Ripple has spent $1+ billion building products and partnerships. They promised banks would replace SWIFT with XRP-based payments. That hasn't happened at scale yet. But there is real adoption. Here's what's actually happening. RippleNet participants include 200+ institutions. SBI Remit in Japan using ODL for remittances. Siam Commercial Bank in Thailand using ODL for cross-border payments. American Express testing payment corridors. Standard Chartered Bank using ODL in multiple corridors. Santander using ODL for payments. This is Ripple's main success. ODL uses XRP as a bridge currency for international payments. Real example: a remittance sender in Mexico wants to send money to Philippines. Mexican pesos go to XRP instantly. XRP flows across the bridge in seconds. XRP goes to Philippine pesos instantly. Recipient has pesos in their local bank account. This actually works. Ripple processes billions in ODL volume monthly. That volume is growing. Banks still prefer SWIFT for major transactions due to regulatory reasons. XRP adoption slower than Ripple originally promised. Volatility makes it unreliable for some use cases. Competition from other solutions like Stellar and traditional blockchain banking. XRP is not the SWIFT killer Ripple originally promised. but it is solving real remittance problems in specific corridors. It's processing billions in real transactions. That's not as revolutionary as the original vision, but it's something. Understanding XRP supply is critical to understanding its potential price. Total supply, 100 billion XRP were created. About 49 billion are in circulation as of 2025. About 50 plus billion are held by Ripple. In 2017, Ripple locked 55 billion XRP in escrow. This means 1 billion XRP are released monthly. The released XRP are available for Ripple to sell or use. Remaining XRP go back to escrow after each month. This was supposed to prove Ripple wouldn't dump all their XRP at once and crash the price. It provided some stability. Unlike Bitcoin, which has a 21 million cap, XRP doesn't have a hard cap. Theoretically, Ripple could release all their escrow. This is bullish or bearish depending on your view. Bearish view. Unlimited supply equals inflation pressure, harder for price to rise. Bullish view. Escrow is orderly release, predictable, better than random dumps. XRP's price is influenced by adoption of ODL. More use equals more demand for XRP. Ripple's business success, more partnerships, equals more confidence. Market sentiment, crypto bull and bear cycles. Regulatory clarity, SEC lawsuit removal, equals positive. Federal Reserve decisions, crypto rallies when rates drop. The key question: if ODL volume grows 10x in the next 3 years, would that require 10x more XRP? Maybe. Or maybe the same XRP just circulates faster. This is still debated among analysts. XRP isn't the only solution for international payments. Let's compare. XRP versus Bitcoin. Bitcoin is secure, decentralized, slow at 10-minute settlement, energy intensive. XRP is fast at 3 to 5 seconds, efficient, but more centralized with Ripple influence. Winner depends on priorities. Bitcoin for digital gold, XRP for payments. XRP versus Ethereum. Ethereum is programmable, thousands of apps, smart contracts, more innovation. XRP is focused on a specific use case for payments, simpler. Winner is Ethereum for general tech, XRP for payments. Stellar was actually created by a Ripple co-founder, McCaleb. It's very similar to XRP, but focused on poverty reduction and financial inclusion in developing countries. Stellar has 50 billion supply, non-profit model, more distributed. XRP has 100 billion supply, for-profit company, corporate focus. Winner depends on mission alignment. Stellar for developing world, XRP for institutional. Swift is established, trusted, slow, expensive. Blockchain solutions like XRP, Stellar, CBDCs are faster, cheaper, newer, unproven at scale. Winner is blockchain solutions eventually, but Swift still dominates. The real competition for XRP might be government-backed digital currencies. Every major country is developing CBDCs. If governments issue their own digital currencies, banks might use CBDCs instead of XRP for settlement. This is the long-term threat to XRP. The bull case, why XRP could succeed. Real adoption is happening. ODL is actually processing real payments. Volume is growing. Regulatory clarity has been achieved. SEC lawsuit resolution removes the biggest risk. Institutional interest is growing. Banks are testing. Some banks use it in production. Macro tailwinds are favorable. Digital payments are growing. Cross-border payments is a huge market. Limited competition exists. No other solution is as mature for institutional payments. Ripple's capital is substantial. 1B Plus invested in partnerships and development. Technical advantages are proven: fast, energy efficient, proven technology. The bull scenario: ODL becomes standard for bank remittances. Cross-border payment volume grows 5 to 10x. XRP becomes critical infrastructure. Price follows. Target: $10-$100 per XRP, 5-50x current. Ripple dependence is problematic. Too much influence from one company. Bad for decentralization principle. Massive supply is a concern. 50 billion XRP in Ripple's hands. Potential for price suppression. Adoption is slower than promised. After 13 years, still not mainstream in banking. Swift adaptation is a threat. Swift is building faster solutions. GPI might not need XRP. CBDCs are a threat. Government digital currencies could replace XRP for settlement. Regulatory risk exists. New regulations could limit XRP usage. Centralization is a problem for many. Many see Ripple as antithetical to crypto values. Competition is increasing. Stablecoins, Layer 2 solutions, other blockchains improving. The bear scenario: banking adoption plateaus, CBDCs become standard, XRP becomes niche. Price stays low. Target: $0.50, $2.0 per XRP, declining from current. Both cases are plausible. XRP is not binary. It could become valuable infrastructure, become marginally useful somewhere in between, or become obsolete. The outcome depends on factors largely outside XRP's control: regulatory environment, bank adoption, tech innovation, macro conditions. Should you invest in XRP? This is not financial advice. But here's how to think about XRP as an investment. XRP is good for you. If you believe in institutional adoption of blockchain, you think Ripple's business will grow. You're comfortable with higher risk. You have a multi-year time horizon. You don't mind volatility. You believe in cross-border payment innovation. You can afford to lose the investment. XRP is not good for you. If you need stable income, you want guaranteed returns. You don't understand what it does. You can't handle 50% price drops. You're investing to get rich quick. You have short-term needs for the money. You disagree with Ripple's centralization. Understand the technology. Does the solution actually work? Track adoption. Is ODL volume growing? Are banks really using it? Watch regulations. Is the SEC giving clear rules? Monitor competition. Are better solutions emerging? Evaluate management. Is Ripple executing on promises? Consider macro. What's happening in finance, tech, government? If you do invest in XRP, only invest what you can afford to lose. Crypto is speculative. Don't invest more than 5 to 10% of your portfolio in any single crypto. Have a clear thesis for why you believe in it. Monitor that thesis. Is it still valid? Set stop losses to protect downside. Take profits. Don't get greedy. So what's the future of XRP? Honestly, nobody knows for certain. But here's what we know. XRP is not a scam. It's a real technology with real utility. Ripple is a real company building real solutions. But XRP is also not Bitcoin. It's not going to replace global finance overnight. It probably won't even replace SWIFT. What XRP can do is solve specific payment problems for specific institutions in specific corridors. It's doing that now. ODL is processing billions. Will that be enough to make XRP valuable long-term? That depends on how much the banking industry adopts it, how much crypto and blockchain get accepted by regulators, whether CBDCs become the standard instead, whether Ripple's vision is right about the market. My personal take: XRP will probably find a niche. It's unlikely to be the world-changing asset some believe, but it's also unlikely to go to zero. More realistically, XRP will be useful infrastructure that provides steady returns to early believers and steady competition to newer solutions. Is that enough to make it worth buying? That's for you to decide. But at least now you understand what it actually is. XRP is a digital token designed for fast, cheap international payments. It's backed by Ripple, a company building payment solutions for banks. The XRP Ledger settles transactions in 3 to 5 seconds, compared to banks' traditional 2 to 3 days. Ripple's on-demand liquidity product uses XRP to bridge currencies, enabling instant remittances. While adoption is slower than promised, it's processing billions in real transactions. The main risks are regulatory uncertainty, company centralization, and competition from CBDCs. XRP is real technology, not a scam, but it's also not guaranteed to succeed.